very warm welcome. I am Ruchi Sharma. Ethereum has seen a notable rise in long-term holder accumulation, with a 22% increase in holdings over the past 2 months, signaling strong investor conviction despite recent price declines. On-chain data from CryptoQuant highlights that accumulating addresses those consistently receiving ETH without major sales grew their holdings from 15.53 million to 19.03 million ETH since March 10th. This trend emerged as ETH fell below its realized price of $2,026, reaching $1,866, placing many holders at an unrealized loss. Despite the downturn, long-term investors are buying the dip, reducing their average cost basis and indicating expectations of a bullish breakout. Litecoin experienced a sharp decline of 7% after the US SEC announced a delay in its decision on a pending LTC ETF application. While the delay was anticipated, it still triggered a sell-off, pushing LTC's price just above the $80 mark. This drop makes LTC one of the worst performers among major altcoins in the past 24 hours, reflecting market sensitivity to regulatory developments. Bernstein researchers predict that corporations could invest up to $330 billion in Bitcoin over the next 5 years, signaling a major shift towards adopting BTC as a corporate treasury asset. Inspired by Michael Saylor's strategy, many small, low-growth companies with excess cash may follow a similar path. Of the total, $205 billion is expected from listed corporates, with $124 billion potentially from strategy alone. Companies with over $100 million in cash could contribute the majority of this capital, while high-growth smaller firms might add $11 billion by 2026. Though the strategy model has proven highly successful, with 555,450 BTC held at over $14 billion in unrealized profits, Bernstein warns that not all firms will be able to replicate its success due to Bitcoin's price volatility. This week, the crypto market is facing a $389 million supply shock as multiple projects unlock large amounts of tokens. The biggest unlock comes from Solana, releasing $86.73 million worth of tokens, nearly 13% of its supply. Ethena and Spectre follow with $50 million and $21.3 million unlocks, respectively, with Spec releasing nearly half of its supply. Other projects like Caspa, Movement, and DogeCoin are also contributing to the increased supply, alongside daily unlocks from Solana, WorldCoin, and Memecoin Trump. These unlocks raise concerns about potential sell-offs, as early investors may cash out, especially in the case of cliff unlocks that release a large portion at once. Israeli-based trading platform eToro has announced plans for a New York IPO, aiming to raise up to $500 million and achieve a $4 billion valuation. The offering includes 10 million Class A shares priced between $46 and $50, with half coming from the company and the rest from existing shareholders. Underwriters including Goldman Sachs, Jefferies, and Citigroup may purchase an additional 1.5 million shares to cover over allotments. eToro will list on the Nasdaq under the ticker ETOR, and BlackRock has reportedly shown interest in buying $100 million worth of shares. This IPO follows a failed 2022 SPAC merger that once valued the company at $10.4 billion. If successful, eToro will join Coinbase and a few others as one of the rare crypto-linked firms to go public in the US. Riot Platforms sold 475 BTC in April, its first major Bitcoin sale since January 2024, earning $38.8 million in net proceeds. The sale included 463 BTC mined that month and 12 BTC from reserves. Riot CEO emphasized the move as a strategy to avoid equity dilution and maintain a strong balance sheet. Despite holding 19,211 BTC and reporting $161.4 million in Q1 revenue, a boost driven by mining, Riot posted a net loss of $296.4 million, down from a $211.8 million profit a year earlier. The cost to mine one Bitcoin surged post-halving to $43,808, nearly double the previous year. Riot's stock dropped 4% to $8.04 following the news. South Korea's Financial Services Commission introduced new regulations for cryptocurrency donations, exchanges, and token listings. Non-profits receiving crypto donations must outsource processing to experienced organizations, ensure tokens are traded on at least 3 exchanges, and cash out donations immediately. Exchanges receiving tokens as fees must sell them via third parties, not on their own platforms, to avoid conflicts of interest with restrictions on which tokens and how much can be sold. New rules also target token volatility, particularly for new listings, zombie coins, and meme coins. New tokens must ensure sufficient initial supply, while meme coins need a large community and high transaction volume to be traded. Thinly traded tokens may be delisted. Additionally, the need for new laws on security token offerings was highlighted, and Korean banks are developing a stablecoin. Bitcoin's recent recovery has stalled, trading within a range of $93,000 to $97,000, with a slight decline of 1.3% over the past day. However, on-chain data shows a significant decrease in Bitcoin reserves on Binance, with over 51,000 BTC withdrawn since mid-April. This suggests a shift in investor behavior, possibly reflecting long-term holding strategies or movement towards decentralized finance and other blockchain ecosystems. The drop in exchange reserves, often associated with reduced liquidity, could set the stage for future price movements. Historical trends show that when Bitcoin's supply tightens on exchanges, it may lead to upward price momentum, especially if institutional investors continue accumulating Bitcoin. Bybit has launched a new spread trading feature that simplifies complex crypto strategies by combining multiple trades into a single slippage fee transaction. Currently available for BTC, ETH, and SOL, the tool supports 4 contract combinations and allows users to pursue delta-neutral strategies with reduced execution risk and up to 50% lower fees. It's designed for traders focused on precision, cost efficiency, and hedging. In parallel, Bybit partnered with Zodiac Custody to offer off-venue settlements for institutional clients. This integration enhances security by enabling trading without pre-funding exchange accounts, maintaining asset segregation through regulated custody. Backed by major global banks, Zodiac brings institutional-grade compliance and infrastructure to Bybit's expanding ecosystem, supporting the platform's push into centralized and decentralized finance. Uniswap has integrated Sonium, Sony's layer 2 blockchain, into its web app and wallet. User can now swap, bridge, and provide liquidity on Sonium without leaving the platform. Designed to support fan and creator interactions, Sonium has already hosted NFT events and digital ticketing. The integration strengthens Uniswap's push to lead in DeFi innovation. Well, that's all in this bulletin for now. This is Mruchi Sharma signing off. Do like, share, and subscribe to 3TV, and for more information stories, log on to our website www.3university.io or scan the QR code.